hours of infotainment for you. And it's great to have you along for the ride. Thanks for being there to consume it. 92.1, 101.7 on the old terrestrial radio. We see you out there. And you can see us as well live streaming on Facebook, Florida Talk Real Estate on Facebook. We also live stream on the YouTube page. That's Florida Talk Real Estate LLC on YouTube, home of a ton of informational chunk videos and our live stream for 2 hours of infotainment on a Saturday. And of course, you're welcome to be a part of the program. Toll free 877-927-6969. You got questions, comments, concerns in the world of real estate? Get involved in the conversation. Dial it up. The first voice you'll hear, the melodious tones of our producer extraordinaire, Johhny, my brother. How you be?
I be mighty fine. Good morning, Johnny. How you doing today,
I'm
pal?
so good, man. It's good to see you as always.
All these arms are in the way. I can't even see. I barely jump up.
There he is.
What's going on, bud?
Oh, you got your shirt off today.
Nice. Oh, yeah. See
Check
that?
it
Some
out.
glass cut.
Nice. Live stream. I'm telling you. Nice to see you as always. I'm your boy, Johhny C, your old buddy, your pal. Let's get your starting lineup on a Saturday morning. Always nice to say good morning to Ross Komarinetz with Brightway Insurance, Juno Beach. Ross, how are you? Oh, no. Hold on.
Go ahead, Ross.
Hi.
Oh, hey.
There it
Hey.
is.
Hey, how's
Right.
it going?
Good
Good to see everybody.
Hey, nice to hear you, too.
Oh, thank you.
Mm-hmm. You're sitting next to Mike Rauch. That's the mortgage guy from the mortgage firm. Hello.
Good morning.
Good morning.
Good to hear you and see you
Nice to be
and
seen.
smell you.
Nice
Too.
to be
I
heard.
forgot about that. We're close together.
What's the smell?
I mean, pleasant as
okay.
always. Yeah.
Because I'm a deodorant guy. Like, I don't put anything else on. So when you say that, I get concerned.
Oh, I didn't mean to make you self-conscious. About
No, I was
No,
for
no.
a second. I was like, oh,
I was just going through
did
the
I not
senses.
hit the right
No.
spots?
Too
No,
much
I was
garlic again.
Just going through the senses.
Okay.
Yeah.
Nice.
I didn't want to say touch. I thought it, but I didn't want to say it on the air.
But
you
it's
know.
pleasant. Yeah. Well, I'll tell you what, some of the best conversation are the conversations before and or after maybe.
Yeah,
And
let me tell you.
I wish we could go down that road.
I want to move to Utah now.
I'm thinking
That's
about
an inside joke, and we're going to leave it there, too.
it. Let it soak in. Just let it soak in.
But yeah, great morning. I mean, the weather we've been having is like this time of year. I always think this is why I look the weather wise.
Yeah.
Like the absolute best.
It's
So
pretty all right. And we know that heat's really coming too. You
yeah,
have to look
yeah.
forward
Try
to.
not to think about that.
Warm
no.
them yesterday. Had a little cool front, I guess, for South Florida.
Yeah, like last night was
Yeah, come
super cool
Super
and,
nice.
Woke up
and
like
fresh.
in the 50s this morning up
Yeah.
in the Pizzle.
You were out doing your morning jog.
Mm-hmm.
Yep.
Yeah.
He's like, yeah.
Anybody buying that?
I was thinking about
Anybody?
that.
Well, hold on. You work out in the morning, don't you, Jim?
No.
Not anymore. Did you break that routine?
Well, yeah, just because I started earlier today. So,
Gotcha.
That kind of went out the window,
Well,
unfortunately. But
I know that was part of your routine.
it was, yeah. I wish we can get back one day. Hopefully,
There
one
you
day
go.
we can get back into it to set up a routine where we can get back to the gym.
Beautiful. Thank you, Jim. We'll see you at the gym. Speaking of gyms, we have a fearless leader I need to introduce. You're missing your microphone, though, so I'm kind of stalling for you. I thought you were just setting up.
Yeah.
Yeah, I thought you were still. I mean, it was.
I kind of did the same thing. We're setting up these cameras, and I completely forgot like the mic is part of it. So
Yeah.
I think I still
Hey,
need
look.
to make some adjustments.
I can see now, John.
It is an important aspect to the radio part. Our fearless leader, of course, is a Jim. That's Johhny D. He runs a top producing Keller Williams team for the Home Pros, Keller Williams Innovations. Johhny D, how you be?
Good. I don't know if I call me fearless as much as clueless. I think clueless leader would be better.
Both.
sometimes.
That's like those.
Yeah.
Those are tied together forever.
Yeah, that's true. Sometimes they are tied
You
together.
got to be clueless to be fearless sometimes.
Exactly. That's true. That's so true.
Nice.
Our camera system is getting better and better for our YouTube channel, so we're building as we go. Mike, if you could just center yourself a little bit better. When
Yeah,
you get a
I
chance.
just backed out. It was a little too tight.
Yeah.
Come on, Mike, get with it.
I'm tight. That's an industry term. I think.
It is, yeah.
Gotta
Tight?
back it out a little bit,
Yeah,
and I'm
bring it
gonna.
back.
I'm gonna be slowly adjusting here.
If
Oh,
you would,
wrong way. See.
you know, it would make
You guys-
your life a lot easier if you just move your camera this way and point the camera that way, the
I think you're right.
microphone that way.
I
Then
think
you
you're
have a
right.
full face,
Yep.
and you won't be all hidden.
So you guys can zoom from your laptops
We're-
on the camera.
We're getting there.
That's
Look at that.
pretty
No,
cool.
I cannot.
You don't have that power?
No.
No, it's
No.
only the two I brought in today.
Yeah. Oh,
Your
gotcha.
old computer. That's your old computer.
I've got a little bit of
You
control.
wanna smash it.
Johnny, I have control over me and Ross. So if anybody has any requests on Ross, want to be centered, zoomed in,
You got them.
wide pan, whatever. I can do it.
Beautiful.
Just
All right, a little lower, Mike. A
either
little lower.
either
little
call
lower,
in
lower,
lower.
lower.
Yeah.
877-927-6969.
Okay, so Mike, while we're talking, keep adjusting the thing, because the idea is not to record the microphone in your face, to record your face so we can get your face.
All right, so I'm gonna reposition.
Yeah, thanks. I
Got it.
appreciate it. Sorry, thanks to everybody, terrestrial radio. Thank you
Appreciate
for
you.
bearing with us. We really appreciate you. And now it's time to start the show. So we're going to be talking about a lot of things today. We have so many insurance articles, Ross, that have been coming out. All kinds of stuff. I mean, it's all over the place. Good news. They say it's horrible news. Who knows? So I'm going to start throwing out some of the headlines that are coming out later today, Ross, and you tell me BS or real. From your experience of being down in the trenches, the thing that I love about this show is you're not just reading headlines and people that aren't in the business and working on it all the time. We're in the trenches every day doing stuff, right? We're swinging for our customers and trying to do the best deal for our customers.
So I read a lot. I've seen a lot of articles
So
lately,
much,
and
right?
everyone, or at least the ones that are like, okay, there's something here. I'm like, oh well, we've been talking about that. That's what I love about this show is if you want to get the news, you get it, and then you can read about it later after it's already well set in, if you choose to. It's like, oh yeah, we've been on that. I've heard that. I know that. Ross said that. It's they're late. They're about 2 months late typically.
Late, and oftentimes like getting it wrong. Like we find that a lot.
Like I say, when
I'll be watching
I'm
news,
like,
I'll
there's
say,
some
my God.
substance here. I'm like, otherwise it's like, that's all phooey.
Yeah.
Remember in November when they said we were going to have 9 cuts this year? Not the Fed didn't say that. The regular prognosticators were coming out with 9 cuts. I'm like, there isn't enough time in the year to do 9 cuts, right? They'd have to be really pushing on the brakes like Fred Flintstone in the car, right, in order to hit 9. Now, and how many rate hikes have we done this year?
Hikes?
Yeah.
Hikes.
Or
Hikes or cuts?
decrease. Sorry,
There's
cuts.
been no
Somebody else.
increases this year
And no decreases.
and no decreases.
Right? We're supposed to have 6.
Maybe 4.
3.
We'll
now,
see.
yeah, now they're
I
saying
think
3.
3. Yeah, 3 was what the latest. But
Yeah,
I mean, that was
I'm
early
joking,
in the year.
but they
Yeah.
were saying
Yeah.
6 early in the year. That's why I'm saying that. How time flies, right?
That's it.
So we've been telling you, though, we've been telling you guys for quite a long time that we didn't believe that we were going to see as many cuts as they're saying. And we explained why. We gave reasoning why. We don't have any skin in the game. We're not trying to get you to buy stock from our companies. We're not trying to get you to do things. We're really trying to educate you. And where we are is where we are, right? Without any kind of spin. And that's what we do on the show. And that's what we've been doing for a long time. Guess what we just had? I'm so excited. Mike, did you get a call? Did you talk to Jerry yet? Jerry?
So, no, I reached out to Jerry, but we haven't connected.
Let me tell you, that's going to be so exciting. That guy wants to be a first-time home buyer. So he's been listening to our show and called us up. He's interested in down payment assistance. He has credit card issues, some debt issues that he needs to talk to Mike about. But then he tells me he breaks down the debt. And because we're not saying his last name, I'm going to say the amount. Okay. So he has $60,000 of student loan debt, right?
I've seen worse.
Yeah. But still, that's still high for a first-time
Substantial.
home buyer.
Yeah, maybe not worse. I mean, worse is I've seen highly educated people.
But-
Highly educated.
Too educated,
Yeah.
way overeducated people.
Overeducated.
That's a good way to talk about it. I'm overeducated. So he's telling me his situation, how he really wants to be a home buyer. And then he tells me he's got $60,000 in student loan debt. And I actually yelled out loud on the phone, yes.
I was like, what?
Right? And he was like, what? I could even hear on the phone. It's like, what the hell? And it was all about, I was like, look, we're going to get you over the law office of Paola Krasker. If you've got a government-backed student loan, we're probably going to be able to do some pretty amazing things for you. No promises, but it looks pretty good.
Yeah.
He told me how much his income is and everything, and I think he's going to have a very happy day.
But he's been a listener.
Yes,
And
he's been
this
a
was
listener.
news to him.
I don't know how long he's been a listener. I can't tell you
Okay.
it's a long time, but he says that he's been listening a lot.
Okay.
So I'm really looking forward. We got him over to Krasker. They've already, Mally from Krasker's department has already reached out to him. So the wheels are in motion, right?
Awesome.
The wheels are in motion right now.
Excellent.
Soon to be a success
Now,
story.
Mike, here's a good teachable lesson for people that have student loan debt. Just a quick hit lesson here. When you have student loan debt, and let's say you're not making a payment on it, you're in forbearance or you just have ignored it, but you're not in default yet.
Yeah.
Okay.
Yes.
Then how do you calculate how much your student loan debt affects your ability to get a mortgage?
So if you're if you're not in a repayment plan or any type of payment plan, we calculate a percentage of the balance.
Right.
And so depending on the loan type that you're doing, so whether it's FHA, VA, conventional, but then there's some differences between Fannie and Freddie as it relates to student loans. So it's either 1% or 0.5%. 0.5% is the best you're going to get. So if you owe 60 grand, that's going to be a $300 payment.
And if it's 1%, it's 600.
It's 600.
Now, I just want to do a teachable moment because I learned this all from Paul, right? From being on the show so many times.
And this doesn't, we're not like calculating your payment that you have to pay. We're calculating the debt as it relates to debt to income.
Because you're not making any payments,
Right.
because you're not making payments, they have to estimate one for you. So what they do is they take either 0.5% or 1% of the total loan balance. Now, your student loan monthly bill might only be $100 a month.
Right.
But if you're not paying it, they're going to count it as $300 to $600 a month. So you need to fix that before you get your loan.
Yeah.
Right, Mike?
And we can even a zero payment is okay as long as the zero payment is the result of an income-based repayment program. So you're in one of these programs where they've calculated you actually don't have to make a student loan payment. And then we can use zero. Other than that, we're either calculating it or we're using the payment that's being reported on the credit report.
So let me tell you right now, especially for affordability issues, which we're going to be talking about later on in the show, this is a great way in order to boost your purchasing power to get to get a house or closer to what you want or get the house that you want. It could make or break difference for some people for the debt to income ratio.
It's also a good lesson, and it's funny. I came across twice this week. I came across needing to have the knowledge of the nuance between the different loan types, right? So FHA makes the rules, the guidelines for lending on FHA loans, and they tell you how to calculate income, how to treat debt, how to treat, wait periods after foreclosures, bankruptcy. And so and then you say FHA, conventional, VA. Well, within conventional, there's Fannie and Freddie, and they're mostly aligned on the rules, but the student loan calculation is example, right? So I think it's with Fannie, it's 0.5%. With Freddie, it might be 1%, right? I don't know for sure, right? But if you don't know that and you're in my position and you send somebody out, with the pre-approval on a conventional loan and you're thinking, okay, 0.5% on the student loans, and you have to go Freddie, and there might be some reasons you have to go Freddie versus Fannie, you messed up. You messed up. So these are the types of things that underwriters are not going to mess up on. Like they're going to spot that. Your loan originator has to be able to spot it early. And so there were two instances of other, guideline differences between Fannie and Freddie that sometimes you don't know what you don't know, right? It's what is it, Johnny? The unknowns. The unknown unknowns.
You're right.
Yeah, exactly. The unknown unknowns. We'll get you.
God rest Donald Rumsfeld.
Yeah.
Mike loves that line.
It's a great line.
It is a great line.
It is a great line.
It is a great line. And anybody that doesn't know what we're talking about, just look up Donald Rumsfeld known unknowns on YouTube.
Yeah.
You got to do it on
Google
YouTube.
search.
Don't read it. You got to watch him say it.
Yeah.
Yeah.
Hilarious.
So go on YouTube. It was fun. I know he passed a few years ago.
I mean, it was funny at the time, and it got a lot of like comic response, but it's actually pretty sage advice.
It is true. I mean,
right?
he wasn't. He was being very granular, and he was trying to cover everything. But it was true what he was saying. But it was still funny.
Oh yeah, it hits the ears so well.
Yeah, it's still hanging around. So obviously, it's stuck with people.
Oh,
So hey, look, Mike just gave some great advice. I'm telling you, you're not getting that advice on a lot of other places, platforms to look at. Try to look at student loan debt and real estate, buying real estate, and see how many people actually are talking about student loan debt affecting your real estate purchasing power, and how to understand how to work within those parameters the best way. That's
the good old days were when you if you had it in forbearance, and if your forbearance was over 12 months, you didn't have to count a payment at all. That's how it used to be, right? So and many people would just like kick the can down the road on their student loans, like, oh, I can't pay now, let's extend it 12 months, 18 months, whatever it was. And as long as it was extended past 12 months, you didn't have to count anything.
That is crazy.
Yeah.
When did they change that?
2015, 16 time frame.
Recently.
Yeah. Yeah.
Wow, that's pretty crazy. Hey, I just wanted to say shout out to everybody watching on Facebook and YouTube. And just so you know, the people on the listener radio, 101.7, 92.1, we love you guys. You're our core audience, and we love you.
Reason we're here.
But when you're driving around, sometimes you're like, I know I do this. If I hear something on the radio and I'm driving around, it's like, oh, I need to memorize that. And then you go home and you don't memorize it.
What was that?
But with us, you could just go to Facebook or YouTube and you can get everything that you missed. So if you're getting in and out of the car and you're hearing a subject and you're running into Publix and you come back out, we're not talking about it anymore, go back.
Yep.
You know, it's right there for you.
Forever.
Florida Talk Real Estate. Just Google it, but Florida Talk Real Estate LLC for our Facebook or for our YouTube, and then just Florida Talk Real Estate for our Facebook. So check that out.
That's right. And it is a .com, your one-stop real estate shop. We're talking about the nuance of positioning yourself as a first-time home buyer or any buyer for that matter.
That's right.
Going to people that are good at what they do is one thing. Going to people that are great at what they do is a totally different beast. Mike talked about knowing the nuance. Not all loan originators know the nuance. Our guy does. That's why we call him the mortgage guy from the mortgage
guy, right?
That's right. We got the best of the best at FloridaTalkRealEstate.com, like Ross Komarinetz with Brightway Insurance, Juno Beach. Not all loan originators are cut from the same cloth. Not all Brightways are cut from the same cloth. Juno is the cloth we look for. Did you know it?
You know that.
And of course, Jimmy D standing across from over here, the fearless leader. He separates from the pack as well. The whole team does. FloridaTalkRealEstate.com.
Thank you. I saw Franny recently in the studio, Ross, and I mentioned to her that we turned on he's giving me a face right now. We turned on the Hot Ross a couple weeks ago, and it was a different version.
Yes.
And we got it on video,
Ross.
but I don't have it. There you go. We got Ross's face when he heard he did the double take. It's like, is that a different one?
New one.
I told Franny, she thought it was funny. She said to say hi.
Hello.
So the other thing is, you know, when we built the show, it was all about trying to get people's questions answered. And more, you know, what I love about radio is that you get all kinds of questions. All kinds of things.
You never know what you're going to get.
You have no idea what you're going to get sometimes. And I really appreciate that. And I like it because it's the spice of life.
Well, especially this radio. So not just radio in general. Radio in general is either maybe potentially scripted or screened out. More importantly, this station, especially locally here, just historically known as, it's not screened out. Now, if it's not for mass consumption, you'll get moved along pretty quick. But Jimmy ain't asking a whole lot of what you want to talk about. Maybe a little bit, but not a lot.
General topic.
That's it.
And have you, I mean, and just be real, Jimmy, we've been on over 12 years. How many people have you actually said, no, we're not putting them on the air?
Hold on. Let me count. Zero.
Yeah, zero,
Never.
right?
Now
Never.
we've had some interesting callers over the years. Some voices that we'd be like, oh boy.
Yeah, aren't there some known offenders?
There are, yeah. And known unknown offenders.
Right.
Those
Jimmy's
two.
got a sixth sense for it.
Those two.
I still think about that stock. I call him the stalker. You know what I'm talking about? With Rob.
Oh, Rob's got,
Rob Stalker.
Yeah, see, that's a voice that I after like the second call, we're going back like 12 years.
And
You're like,
so
this
good
is
on
going to
it.
be a hit and run. This is going to be one that Jimmy might have to dump,
Mhm.
or maybe not.
For the people not knowing what we're talking about, Rob used to be my old business partner back in the day when the show was called Talk Real Estate with Rob and Jim.
Rob and Jim.
And there was one guy, and I don't know who he was, but Johhny did.
Oh,
and
yeah.
he never gave it up, right? Never gave it up. And the guy used to call up and then ask a real estate question that sounded kind of serious. And then he would say, Rob has a big, you know what?
Yeah, or he'd reference Cleveland Gary, who was on the locker room many, many years ago.
So this was a real radio dude.
Yes.
Okay. Now,
Oh, it was?
now-
It was
now-
yeah.
Oh, yeah.
Now I'm with you.
And he kept doing it over and over again. And Rob got angrier and angrier and angrier about it. And at one point, he's like, am I going to have to hire a private investigator? And I was laughing. He didn't like it because I have a weird sense of humor. So I thought this whole thing was funny. And
It
I
was
said,
very
you know,
real radio.
it could be worse. It could be worse. He could be saying the opposite.
Yeah, really.
He could be saying
Too
the
many
opposite.
compliments.
Wait, weren't you in charge of setting up the callers in the early days? Right?
I never told him that was a stage caller. That is funny, Mike. So Rob is anybody wondering, like total old school guys, Rob is still running around doing the retirement thing. I just saw that he's selling his RV and truck on the air. So if anybody's looking for an RV or truck, I'm sure it's in excellent condition.
Oh, I bet.
The guy's like super mechanic, but he's running around doing that. And he said he bought another one,
Well, good.
bought another RV, a smaller one.
But that makes me
So-
smile. He's doing well.
Yeah, so
Good.
he's doing good. I'm really happy for him. So God bless. When we were talking about earlier about our radio show and how we really just try to answer people's questions, man, the calls that we've had in the last couple of weeks, we told you about Daniel last week, who was in trouble with his eviction on his rental. And he was a young father with a brand new child who was had serious medical issues and nearly died, and was overrun with bills and couldn't make the payment. And we got him to the right people. We got him to a landlord attorney that specializes in just landlording, and we were able to help solve his problem for now. And I was really happy about that.
That's great.
But people are calling up all the time, Mike, and asking us like really big questions. Like, for example, Kathy that you talked to this week.
Yep.
Kathy's been a long time listener of the show. She decided that she's going to be selling down here, but she wants to move either to South Carolina or Pennsylvania. She's not sure yet. So that's a lot of, and she's a senior, right? So there's a lot of moving parts like going on. A senior like I am, so I'm not judging on age. So, but there's a lot of moving parts in that because she's moving. She has to sell her house here. She isn't even sure what state she's going to move to.
Yeah, and pretty different locations too.
Very
Yeah.
different locations, different price points, probably, I'm guessing, right? Different average, housing stock. And she isn't even sure which way to go. And so she called us up. It's like, I don't even know where to start. So met with Kathy, went over everything, went over some rough numbers of what we think we could sell her house for. Not exact, right? Because we don't know when she's going to do this. We just gave her a snapshot of right now.
Right.
Then we did what's called a seller net sheet, which is a calculation of how much you actually net in your pocket after all the costs, including real estate commissions and documentary stamps tax or any other tax or cost involved in the sale of the home, so that Kathy would know how much money she has in her pocket. Now, Mike, when somebody's thinking about selling and then buying again, is it important for you to know how much they have for the seller net?
It certainly can be important. So the main question is, do you plan on using the proceeds from the sale, right? So what you're going to net on your sale towards the new purchase. And some people, I would say most people are planning on using that, right? Like the money that they get from the sale, they're going to put into the next house. Very, very common. And so the question there is, do you have to sell before you buy? Yes. And then kind of what cash are you going to have available? Well, that's contingent on the sale proceeds. So some people aren't like that. Some people have, significant retirement savings, and maybe they can do this with, I was going to say that maybe they can do it without selling the home first. Like they don't need the cash, but because they know their reserves are going to be replenished when they do sell. But yeah, definitely a critical question. The other big question, Jim, when you're relocating is what's your current sources of income? If you would need to get a loan, that is.
That's right.
What's your current source of income? And is that income coming with you? Right. So a lot of people don't think that. They're like, oh, I'm going to move. I'm going to get my job down there. Can I get approved? Well, no. Like you got to come down and have your job established. But if you're keeping the same job, or maybe you're retired and you're on Social Security, pension, things like that. Maybe you're living off your retirement savings, your 401ks, your IRAs, like all of that stuff is portable. Or people who are remote employees, right? Or even people sometimes self-employed, as long as your self-employed business
Is
is
movable.
portable, right?
Yeah.
So if like I'm already doing business all over the US, okay, well, it doesn't matter where you live. I'm a car detailer, right? Well, car detailing, you're going to have to go up and establish your new kind of customer base.
Clientele, right?
Just
Right.
curious,
that-
with today's environment where everybody's remote,
Yeah.
could I just go, yeah,
Yeah, I'm remote.
I'm
Sure.
remote.
So the answer is yes, if you're remote. and we can establish that. So if you're a W-2 employee who's remote, we're going to say, I just, my initial interview is like, what do you do for work? Right. Okay. Where do you work? You got like an office? No, I work from home. I work from home sometimes. Okay. So with this move, are you going to continue in that same role with the same company? Okay. If we need to, we're going to reach out to, a supervisor, manager, HR or something. Are they going to confirm that you're a remote employee? And the answer is usually like, yeah, of course. But I do ask those questions because guess what? Somebody is going to be asking those questions, Johhny. It's like
they are.
this stuff doesn't slip through. So my goal is to make sure we can get to the finish line. So I ask these questions.
And this is like out the gates too. Like these, I remember our conversation.
First
This is
interview.
early.
Yeah. First telephone conversation.
Right.
I'm asking this stuff, and based on the answers, I know. Like if I can tell if it's going to be a complicated one or not.
So with like a situation with Kathy's, one of the things I think that's really important, I think this happened with Jason too, who's Jason is another customer of ours who actually short sailed a house with us back in 2013. That house is where we did the police sting with the sheriff's office. Do you remember that?
Oh, I do remember that.
Where we had to do the police sting because some people went into his house and stole belongings from him, and I had to do a police sting and get him arrested.
I remember the story. I didn't know that was
that
Jason.
was Jason's.
Cool.
Yeah, he was a firefighter back in the day.
Don't you tell a story about that on a YouTube?
Yeah,
show?
I did. It's somewhere on my YouTube channel. There's
Yeah.
a story about that where I had to do the police sting. And but Jason and Kathy, this is a very common thing when you're selling your house and you have a big deposit. You don't know how many people, Mike, when they call me, I'm sure it happens with you too. Yeah, I'm going to sell my house. I got a lot of equity. Then when I buy the new home, I want to put it all down on the house that I'm buying. That's not a bad idea, but it isn't. And it sounds like it's common sense, but sometimes it isn't. And Mike's going to sit down and analyze if that's the smartest thing for you, because let's say that you only have to put 20% down, but you're putting 50% down. Okay. And you're doing the 50% because you want the lowest payment possible. Well, Mike might say to you, do you want to keep some money on the side and not spend everything into the loan so that you have some flexibility if things happen in life? And one of the things
Sounds
that
like
you could do,
Mike would definitely
right?
talk about, yes.
And one of the things you could do is say, hey, if you only put 30% down, this is how much extra your mortgage payment's going to be, and how long will it take for that difference in mortgage payment to make up the difference in the bigger down payment? And if it's like a huge amount of time, like 10 years, 15 years, you might not want to do that. I mean, just if you,
I have the conversation a lot, and I don't tell people necessarily what I think is best for them, but I throw out the different ideas, and I usually say, listen, if you have a financial advisor, like that's the best person to have that conversation with. But it's usually something along the lines of, especially I think as you get into retirement age, or maybe you're retired, the question is like, where is your money best situated? Is it in a super safe investments, including, high yield savings account? Is it okay in the market? Or do you put it into what I call the piggy bank, which is the equity position in your home? The problem with putting it into the equity position in your home is, number one, it is difficult to access if you need to, right? So at some point, the whole idea is, well, I don't want a mortgage payment, so I'm going to buy my house outright. But if you need to get that money back for some reason, either to fund your lifestyle or to emergencies or whatever it is, it's difficult to access. You have to leverage the home at that point, home equity, a new mortgage, or perhaps even selling the home. Like those are the extreme is like you got to sell the home in order to get your equity out. And the other thing is that you, once it's in there, you don't control the market value of your home.
Right.
And it could be that you have access to less money that you put in at some point in the future. Now that also is a risk with investments. Right. So there's some super safe ones where you don't have any risk of losing, but the house value is one of those that you have no control over.
It fluctuates.
Right? It's just going to fluctuate. And of course, long term, you think it's going to go up, and it probably will. But there may be times where getting access to money is critical, and the market is down at the time, and you just can't get as much as you thought. So,
yeah, one of those cycles, Mike, was when we were having the real estate crash. So people had a lot of equity or a decent amount of equity. But then when the market crashed, their equity disappeared pretty quick.
Yeah.
They were still thinking in their minds, I got equity in my house, and then found out they didn't have
Yeah,
it.
and it's even like if let's say the home value, I mean, this is crazy talk, but it cuts in half again, right? You bought it for 500,000, now it's only worth 250. You might not even be able to get into that equity position without selling.
Right.
If we're in a downward market and you need 250,000, well, guess what? It's going to be very, very hard to get it. Now, of course, I also tell them, so keep in mind, I'm the loan guy talking to you about maybe it makes sense to get a loan, right? So you have to, I'm upfront with that. Like, that's not my goal. I just talk about this stuff because I think it's important. I'm like, if I have this conversation with my mom, like that's how I'm having the conversation, right? Also, your financial advisor, they want to manage your money as well, right? So they might say, of course, yeah, let's manage it. Let's give it into safe investment. That conversation was much easier, of course, when rates were at 3 or 4%. Because then you can say, well, just put it in the market. You're going to make 5, 6, 7, 8%, whatever it is. Now, I don't think it's so easy for the financial advisors to like guarantee a return where it makes financial sense. So for me, it's just more about like, how are you positioned from like a reserve or asset position if you take the proceeds and sink it into the new home or whatever money and sink it into the new home? Like, do you have plenty of reserves outside of that you can tap into for living expenses and emergency and all that? And if that's the case, then yeah, why have a mortgage? Why pay 7% if you don't have to?
But it's really important, I think, that people have that conversation. It isn't a conversation that everybody has, right? They just a lot of mortgage companies will just or mortgage loan originators, mortgage officers, loan officers and mortgage originators will just, oh, you want to put 40% down? Great, right? They don't have that conversation. Mike will.
Yeah, and I think like in Kathy's case, it's really helpful when you go from, geez, I just don't know, to you start like narrowing down possibilities, right? And it just so happens she's really well positioned. So now she's talked to you, Jim. She kind of has a ballpark on what her proceeds are going to be. She's talked to me. She has an idea on what she could qualify for if she wanted to get a loan. So even if she wants to get a small loan, sure. If you want to get a little bit bigger, yeah. If you want, there's going to be some limit based on your income where we're going to have some thresholds, but you have some flexibility, right? Including buying the house outright, perhaps.
So Johhny, thank you, Mike. Johhny, do you mind if we take the break?
No issue at all. Let's absolutely do that. What are we going to talk about?
On the flip side, we're going to talk to Ross. We're going to talk about all these headlines. I'm so confused, Ross. I read all this stuff. I don't know what's true or not. So we're going to talk to the real deal, Ross Komarinetz from Brightway Insurance.
Juno Beach. All right, excellent. We'll go to the best of the best for all the answers that we're looking for. And that's why we turn to the pros at floridatalkrealestate.com. You get them here on the show. And of course, the rest of the team, you can access them at the one-stop real estate shop that is floridatalkrealestate.com. Know it, use it, love it, share it. We're on Facebook and YouTube as well. You can change your life. Buying a home, selling a home, stuck with a home, not quite sure what to do. Everything in between, everything that touches the real estate world. Remember, floridatalkrealestate.com has you covered. We're back in 4 minutes. Great to have you with us every Saturday. 2 hours of infotainment. It's Florida Talk Real Estate right here on Real Radio.
Got something to say? I got something to say. Text us at 47142. Start your message with Real Radio. Standard data and message rates apply, and don't text while driving. Here's what's happening with the weather on Real Radio.
From the Gordon Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm CBS 12 meteorologist Charlotte Carl. We're already having a beautiful day, and the good news is the rest of the weekend will fix up to be just like this morning. We are going to have high temperatures this afternoon in the upper 70s. Few areas will creep into the low 80s. Windy at times, winds gusting up to 25 miles an hour out of the northeast. Tomorrow we have more of the same.
This report is sponsored by True Green. True Green is the easiest and most affordable way to get a beautiful lawn. All you have to do is water and mow. And to top it off, when you sign up for an annual plan by April 20th, you get one application free. Call or visit truegreen.com today. Restrictions apply.
Hey, it's your boy Johhny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1, and we are an iHeart radio station. This is Florida Talk Real Estate with Jim Paola and Johhny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, cranking it out on a Saturday. Oh, got Jimothy's attention.
Yeah.
Come on now.
Be right back.
One time. Great to have you with us on a Saturday. 2 hours of infotainment is what's offered up, and you're there to consume it. It means the world to us. We got you until 11. Pass the baton to the locker room. Of course, Florida Talk Real Estate is produced by Jimothy over there, who does double duty every Saturday.
Hello, and good morning, Mr. C. How you doing today, pal?
I'm awesome. Thank you very much for asking. I'm your old buddy, pal, Johhny C. I'm your air traffic control, the goofy guy. And, of course, the important people, like Komarinetz, Brightway Insurance, Juno Beach. What's up, Ross?
I'm doing all right, man. Hey, thank you so much for letting us take that break.
Absolutely. My pleasure. Next time you need one, just give me a little kick under the table, okay?
Absolutely.
Yeah. There it is. Ooh. Mike Rauch, the mortgage guy from the mortgage firm. Did you appreciate me allowing you the break?
Yeah, of course.
Good.
I love how we all walk back in here at the exact same time. We're like, wait a second. Show's starting.
Well, yeah, it's
we all like
Jimothy going,
down.
hey, we're starting.
Dead air.
It's very
Yeah,
coordinated.
let's go.
Actually, it probably looked pretty good.
Yeah, it did.
I just looked down when you told Ross to kick you, and he's got sandals on. I was like, and there's a hard piece of wood underneath these desks. I'm like, don't kick, Ross.
Don't do that.
Hurt yourself.
It is going to hurt.
He'll be off the courts for months.
Forever.
Do they call it the courts when it's like beach courts?
I guess, yeah.
Okay.
Once you get like toe problems, it can be bad. You might end up losing your foot. Ask Dion.
Yeah.
Yeah, right?
Yeah.
Turf toe?
It's where it started.
Yeah.
Turf toe.
Lost a step.
Yeah.
I think he lost more than one. They
Might
give us
have.
more than one.
Yeah,
That's
couple
right
steps.
when the Commanders picked him up. You know,
Yeah, well, yeah,
there's the
absolutely.
Redskins
Yeah,
back then.
exactly.
Right?
He was shuffling around.
I
With
remember
that.
that we brought in Dion, brought in Bruce Smith. It's like, what are we doing?
Albert Hainsworth.
What are we doing?
Oh, Gabe Hainsworth, like
Yeah,
like the continent.
like crazy. Yeah.
Jimmy D's with us as always. He's our fearless leader. We wouldn't be here without him. Literally, he'd be like, "We're putting in a rerun." That's what's happening. He runs the top producing Keller Williams team. That's Keller Williams Innovations, the Florida Home Pros team. Jim DePola, Jimmy D, how you be?
Hey, happy South Florida, everybody. And good morning to Dorothy, my mom, Francis, Susan, Betty, Elizabeth, which is the same thing as Elizabeth, and everybody else that's listening to the show right now. Thank you so much for listening. We can take your questions live on air. We're live right now. It is April 13th at 9:40 a.m. So we are live. If
Where's Jarrett?
Any kind of questions? Yeah. Jared Perry from the Perry CPA Group is a little busy until Monday.
Yeah.
He sent me a text last night. He says, I just saw the text that you sent me. It was like a week ago. And he's like, I'm so sorry I didn't call you. It's like, dude.
Oh, he'll return your call at like 3:30 in the morning.
I have to call you back on April 20th. I didn't hear from you. So that's just the way it is. So
420.
Yeah. Wanted to just say, and AJ's on here right now. AJ, it's experienced appraisers.
That's it.
Experienced appraisers. AJ Holman, who was on last week. Thank you so much for checking in.
.com.
Always love having him on the show. We are going to talk to Ross today about insurance. So over the last 2 weeks, Ross, let me just read headlines without getting into the details. Okay. Don't know what. Bloomberg News. U.S. home insurance premiums may hit a record this year, U.S. report warns. The average premium for U.S. homeowners insurance is expected to hit $2,500 nationwide, right?
Man, the good old days, huh?
This year, up from 6%. Florida premiums will approach $12,000, right?
Oh.
Wait, now that's the first headline. Second headline, WPT Channel 5. How much higher could Florida home insurance rates climb this year? Rates in Florida are currently 5 times national average. Okay. New one. As insurance costs rise, Florida homeowners are given a new option for affordability. Okay. Then I saw this one this morning from WPTV. Homeowners insurance company to reduce rates by 2% for new customers and renewals.
That's the one I read earlier in the week that I was like, ooh, that's awesome. Like it was like Peninsula, is that right?
Yep, it was Peninsula. And then there was also one other headline that I lost somewhere.
But the crux of that was all about they emphasized
not about each subject yet. We'll get into it, I promise.
Gotcha.
The last headline was I saw that they said the quality of the insurers in Florida are low. Right. I don't have that article with me. I wish I kept it. I can't find it. It's buried in my computer. But that was another headline. So, boy, right. We have the good news about an insurance company saying that they're dropping rates a little bit. We have other news organizations saying that Florida's looking for the average homeowner's policy to be $1,000 a month, $12,000 a year. So I don't know what to make of all this, Ross. And I know that you're not like the king of all insurance and everything, that you control stuff, but you are in the trenches every day. So are you seeing that the average person right now is getting $12,000 a year insurance in Florida? I don't think so, right?
Not at all.
I don't think so either.
No, Mike would kill me.
Mike, are you seeing $1,000 a month insurance policies as average right now for the customers you're working with?
I would be killing Ross.
Yes.
Yeah.
Yeah.
Now I would say between 400 and 500 might be getting 300 to 500 might be your average, huh?
Per month, you mean?
Yeah.
Yeah, I would say 300 is probably a number that I'm using often when, estimating where I think so 3,600 is a number that is usually
attainable.
Attainable. Not the premium cover. The premium coverage is going to be more than that, but sometimes like I can't price people out when they're just getting started shopping, right? I have to give them something that I think is a realistic, attainable number, not lowballing them. I'm not saying, $100 a month, right? Unless it's a, condo policy. And even then,
yeah,
right?
even then,
it's
man.
like,
yeah.
it can't be, it's going to be almost impossible to find, but I have to give them something that I can't, put what 500 a month would be $6,000.
Yeah.
And that's a big swing. That $200 difference is a big change in
Make
like
or break
buying
somebody.
power,
Yeah.
buying power.
See,
So,
and
but I have to estimate something.
that's what I was always thinking is about $500 a month, like almost anybody I get, unless it's like a townhome or something. I'm thinking
So-
500 a month for single family. Is that?
I mean, if you want to be super conservative,
Mhm.
500. Yeah. But I mean, like Mike said, like if we need a number, still giving them a policy that covers the house and things like that, but some things that may not be more as important to them as buying the house, we can get low most, or get to the number that someone needs most of the time.
But it's gotta be
If they've
realistic.
estimated something
Yeah.
correctly.
Yeah.
Like Mike said, if you're estimating $100 a month and I come in at $500 a month, that's a very large gap to make
Yes.
up. So
Yeah, without a doubt.
So I know I got a family friend that does insurance, and we were talking auto policies the other day, and she's saying it's just super prevalent now where everybody, like all the uninsured motorists, all the like stuff that really protects you, more and more people are just stripping that off to get to like what I have to have. Because we actually made that phone call, and she's like, "Oh, don't feel bad. It's like super prevalent right now." Are you seeing it in the home ownership world too, where they're like, let's just not cover any of our stuff anymore? Like, what's my bare bones? Is that phone call pretty prevalent?
That's a great segue from one of the articles that you didn't know I had. Okay, so that's what I wanted to ask you. There was a company out there that's called Valuefy or something. I haven't heard of this company before, and they're saying that they're giving new options for homeowners in order to reduce their homeowners insurance costs in Florida, but it's a la carte, right? What they're trying to do is they're saying, look, we'll cover you for wind and fire and that kind of stuff, but all the other stuff you can break out and pick and choose. But you do that already, right? I didn't understand what
I mean, I don't know.
So what this says is that the recent surge in both frequency and intensity of hurricanes that have battered the state have prompted numerous insurers and reinsurers to exit the market. And then it goes on to say that
surge in frequency.
Yeah, it says that Value Guard people
you just make crap up.
Homeowners can
That's
choose
the news.
Media.
Homeowners can choose to customize their Value Guard policies. Value Guard policies. This is the name of the company, Value Guard, with add-ons to enhance coverage. This is optional flood insurance endorsement, or like, and they're saying that they're trying to do the a la carte in order to reduce costs for a homeowner. But you and Mike do that already right now, right? You're doing that already.
Yeah, I mean, I'm not sure if they're talking about, we can exclude fire, or we can exclude electrical, like I don't really know a la carte what they're talking about, but what we do is, if we need to make a number, okay, maybe you don't need other structures, maybe you don't want personal property coverage, maybe you're not that risk averse, so you'll take a high deductible. There's ways to take the policy away, or take a lot of coverage away, but still make sure that, God forbid anything happens to the house itself, the house is covered.
And you need that because of the if you have a mortgage, you have to have that.
Oh yeah, you gotta.
Right.
I mean, yeah.
But does the mortgage company doesn't care if all your belongings get destroyed and you have no coverage for that? They could care less about that, right? That's a situation.
The only thing they care about is protecting their asset, which is the structure,
right? Which makes sense. That's what they're insuring. Johhny, I'm sorry, I didn't mean to interrupt because you were talking about your.
Are you seeing more and more of those phone calls though, Ross, where they're like, "Look, can I just what is my required from my mortgage, from the lender? Let me get to that level."
I mean, it's more, hey, is there anything I can do to make this cheaper?
Yeah. So by any means necessary.
Right. That's the question.
Of course.
And, I go over the options. Hey, you can exclude personal property. You can do this, you can do that. Here's the premium options. Sometimes the savings isn't worth it. Sometimes it is, but I don't just, we don't have people just calling and go, yes, I would like to exclude my coverage, or,
So the
But-
phone call is always, how do I save money? I mean,
Yeah,
it's just
and I mean
blanket.
sometimes they
Pretty much.
go
Can you do this for
strip
me?
it down.
Yeah.
They're good. Hey, no, I just want what the mortgage requires. Okay, no problem. And some people are like, I'll just leave it the way it is. Thanks.
Gotcha.
I mean, I think the way that the insurance trend has been is like, so we used to talk about, well, you gotta, like, when you get that letter in the mail for the renewal policy, like, open it,
Yeah.
right?
Yeah.
Don't just let it renew.
Yeah.
And we used to say that because you could be saving so much, right? And you would go and you just get apples for apples, equal coverage, and the premium was less. Why wouldn't you do that? Unless you had some, connection to your insurance. So back in the day, people used to be like, no, I like my insurer, right? When we had, what'd you call them? That they're the low quality insurers now. So
Yeah, that's
it used
what
to
they
be
said,
like
low
quality
quality.
insurers who were playing in the Florida market. And so now, if you don't open that letter, your existing policies it's going up. And over the past, 3-4 years, it's gone really high. So it's like a necessity to make that call, Johhny, because otherwise your expenses go up so much that you just out of control. So you're like calling, it's like, Ross, what can we do? Like, let's shop this. Let's get something. Oh, how can I go cheaper? What do I have to do in order to, I got to pay my car payment, right? I got to pay my main mortgage payment.
Right.
I got to put food on the table. What can we do? I think those calls were almost forced at this point. And so it's not about saving. It's about like reducing the increases as much as possible, or as little as possible.
Throw some brakes on as best you can.
I want to continue with this, but we do have a caller on the air, and then we'll go back to this.
Beautiful.
Okay.
What we got there, Jimothy?
We have Eric on the line, I believe, with Patricia as well. He has a question about home equity.
Great,
Morning,
great.
Eric, welcome to the show.
What's up, Eric?
Thank you. Been listening to you guys a long time. Appreciate you having me on.
Sure.
My wife is here with me. So we've been having a problem. We bought our home right at the beginning of COVID. So obviously it accrued a lot of equity in it really quick, right?
Mm-hmm.
And it was a flipped home in Jupiter. And we started having a problem where it's wood frame siding. And our siding started really falling apart to the point that it needs nearly urgent repairs. It's pretty soggy. But the problem we're having is, finding a contractor that will do wood siding. Anyone that says that nobody will, that we can find will do the wood siding, they all say we need to go to Hardy Board or something like that, which is 100% fine. But then, we went to the banks because that's quite a quote and tried getting home equity for it. And we're only offered full refis where we would lose all of our equity that we've gotten since COVID. So we've been dealing with the issue now about 5 months? About 5 months, where we can't find either anybody to do wood siding work that, we could do relatively cheap out of pocket. And then we can't get anything from a bank that is, reasonable without, losing all the equity in the home.
I have a Eric, this is Jim. I have a question for you. When you went to the lenders to get the home equity line of credit or a second mortgage, and they said they'd only do a full refi, how much equity did they say you had in your home percentage wise? Do you know if you have like 30% equity or 40% equity or 20% equity? Do you know?
Not sure on the percentage, but we owe about $450 on the house, and it's valued mid 600, so 650. So we have about
30%.
maybe we have at least $150,000 in equity on the house.
So that's about 30% roughly, it sounds like. So
Yeah.
do you think that they can get a HELOC?
I think there's equity to do it. I'm not sure how big. I actually happen to have done Hardy Plank on my. I had the same thing. I got a frame house with the T11, right? Is it T111?
It's T111. I used to joke every time I went over Mike, I'd stick my finger through his wall to get into the insulation.
There was a couple spots. I was at a very, very similar spot.
I'm joking with them.
And I did the good things. They would come in and they would cut out the stuff that was rotten and leave the stuff that was good, replace it, and then they'd put Hardy Plank. Looks really nice. I'm really happy with those results. So
Hardy Plank's awesome. I had a wood frame house, the same thing. I could stick my finger in the T111, right, the wood siding.
Wonderboard.
I kept having to replace it over and over again. I did it myself, Eric. It isn't that hard to replace that stuff.
I considered that, and I'm like a handyman. I can take on big projects, but when I saw them after I decided not to, and I hired professionals and I saw the work that was involved and the speed at which they accomplished it, I said, I'm glad I didn't do that because it would have been a lot.
I did my own house by myself.
Yeah.
Right. And I had a 2-story, so that wasn't fun.
Yeah.
But I did my whole house with the hardy plank. But with the wood, Eric, just if you're really worried about saving money, I think the sheets are like $60 at Home Depot, like those sheets that you need, right? And it's not really that involved in a lot of ways, assuming that there's a couple little tricks though. If it's around like all your electrical components, or if you have like a well and tanks coming out of the walls and wires or pipes coming out of the walls, those ones are really hard to replace on your own. But if it's just a normal field, like a normal wall with nothing hanging out of it, they're pretty easy to replace. And all you do is you snap a line, you take your circular saw, you go across where the line is snapping, you put in some SZ flashing, and you insulate it again, and you make sure it's waterproofed, and you put it back up. It's not everybody's cup of tea.
Yeah.
But I was able to do it when I was on a budget as reporter. I did it by myself.
So as far as like the equity.
Sorry.
No, go ahead, Eric.
I was going to say, it's not so much about saving the money. It's the work needs to be done. I've thought about doing it myself. I'm experienced in interior renovation, not exterior. So I've never done flashing or anything like that, which I'm sure is something that's not too hard to learn. It's more about that the work definitely needs to be done, and I want the hardy board, right, because it makes the house more sturdy.
So much better. Yeah.
But it's really, I just want a fair deal, and the other gentleman had said it's really also about the speed. A crew can get it done in a couple days. Where
like a whole week.
Yeah.
It took me like 3 months of weekends to do my house. Yeah, it did take me.
Those
like
guys,
3
it was
months
more than a
weekends.
couple days, just because they have to. There's certain inspection points, but I would say about a week of work, and they had it knocked out. But okay, so back to the equity position. I certainly, you bought your home in 2020. Your rate is probably really good compared to current rate. So doing a cash out refinance would not be your first choice, because you don't want to replace that $450,000 at 4% with some, or 3%, whatever it is, with something at 7%. So home equity is definitely the way to go. Roughly, you should be able to get something like 80% of the current value of your home as a combined loan to value, right? So if you do 80% of 650, and then subtract the 450 that you owe,
that's 510.
Yeah, so they probably have something like 130 something thousand, right? If we
No,
do
like
the,
50.
60.
50, 60.
Yeah.
wait, so what's 650? Doing some math here, times 80% is 520.
Mm-hmm. And
Minus
if they owe
the
450,
450, so 70,000. Yeah. So
if it's worth 650.
Yeah, you should be able to get, assuming you qualify, and this could be yes. I don't know what the bank that you went into is saying, but you should have sufficient equity, which they will establish with some sort of appraisal, right? The appraisal, maybe a comparative market analysis, but I would count on having an appraiser out there. And so that should be enough to do the siding work. I think that's plenty. I don't know how big the house is, but seems like it should be enough. So then it's just like, can you qualify? And I'm not sure which banks you went into, but when I talk to people about home equity lines, it used to be I couldn't do them at all. I actually can do a home equity loan right now, as opposed to a line of credit. I can do a home equity loan, but I will tell you this: the channel I have access to, the rates are not competitive, and so I just don't feel good about saying, hey, unless I'm like the only game in town for you, I would suggest local credit unions, perhaps even national credit unions. There's one that I bank with up north where I know they do home equity in Florida.
Even if you have a loan with somebody else, they'll do a equity loan with you as a separate, even
Just
though
a
they're not
second
tied
loan.
in with the first
Absolutely.
bank.
Yeah. A lot of people think they have to go to their current loan servicer.
I did.
And say, hey, can you guys do a home equity? And of course, depending on who you get on the phone, they're going to be like, let's do the cash out refi. Because why would they do a home equity loan when they could do a $600,000 loan, right? Well,
yeah, and that's what we're running into, is that we're not getting, like, we asked about the equity line of credit, and they're like, oh no, we don't offer that. Or then we asked, like, well, can we just finance, the equity portion and nothing,
Right.
not redo the whole thing. And they say, no, we can't do that. We have to do the entire thing.
Yeah, so you're running into lenders that don't do home equity products. And so
Right.
instead of telling you, hey, go to your local credit union, they're saying, hey, but here's what we can do. I mean, I could have that conversation with you. I can't do home equity or competitive, but I could do a cash out refi all day, right?
It's almost, I don't want to sound too rude, but it's almost like a bait and switch. You know
It
what
is,
I mean?
yeah. But what I love
And-
about Mike every time is
Yeah,
he's going to
he's
tell
not
you
gonna
the
do
best
that.
place to
Yeah.
go. And now you can even do HELOC. It was always, I loved when HELOC was the best option because he's like, your best option is stuff I can't do for you.
Mhm.
But now he can do it, and he's still saying, I'm not competitive.
So, Mike,
Go
with the,
here.
but with the HELOC,
Amazing. Beautiful.
my experience with HELOC, I'm sorry, because this is going to be related. You're going to want to know this question. My thing is that I thought with HELOCs, the reason why you did them is because when you went to the original lender, they would charge you a few $100s to get access to that credit line. But if you're going to a private institution, how much is the cost difference between doing a home equity line of credit versus a second mortgage?
So the home equity line of credit and or the home equity loan are both second mortgages, right? It's the same thing. One of them just happens to be like with the home equity loan, you take a big chunk and you start repaying it. Usually you can find a fixed rate option over a fixed period of time. So at 15
And you take what
years,
you need.
yeah, you take like you're anticipating needing, $30,000 for the project. You do a $30,000 home equity loan. It's paid back on 5, 7, 10, 15, 20, maybe even 30 years on a fixed interest rate. So really attractive, especially if you want to stretch it out. Now, if I went and told you, hey, get a car loan at 7.5% on 30 years, you might look at me funny. Like, right, I'm going to pay this car for the next 30 years. But when it's your house and it's tied into, and you want to do it with the least impact on your monthly budget, sounds like a great option.
That'll
Pay it
work.
off as soon as you can.
Yeah.
The home equity line of credit is more beneficial if you don't need the chunk at once, but you'd like to have access to it, like kind of like a big fat credit card, right? That you can use and pay back and do it, whatever. But the lines of credit are going to have probably an adjustable rate. So it's going to go up and down with the market. It's probably going to be a certain amount of time that you can use it as like it's open as a credit line. You can draw on it, and then it's going to hit a certain point in time, and then it converts to the repayment phase where you can no longer access the line. You just have to pay it off. So I think for a project like this, I would be looking at a home equity loan. I would be looking for a fixed interest rate over a fixed period of time. And credit unions are the way to go because the cost of doing that is oftentimes as low as possible. And I'm talking like $1,000 or less, probably, perhaps even zero to do a home equity line.
And just like any loan, they roll that in, right? Or are you coming out of pocket for that?
It's going to reduce what you borrow. So if you needed 30, maybe you're getting 29, something like that. And I'm just like looking at rates. It's probably somewhere depending on, I would say the longer the time frame to pay it back, the higher the rate's going to be. But I would say rates are going to be somewhere similar to where we are now. So 7, 8, 9, kind of depending on the situation. Now, you do have to qualify, right? So you need to have credit that's qualifying. You need to have the ability to repay this loan in addition to your other debt obligations, right? So there's going to be a new payment you have to be able to qualify for. The home itself is going to have to be suitable. So if the siding is the only issue, just tell them, yeah, we're residing. That's the whole purpose of doing this. If you have other issues, they might not like the home as the security for the loan, right? If your roof is
bad,
active
old
roof leak or something.
Yeah.
So, but I think I'm not assuming any of that is going to be a problem. So it's just about like qualifying.
No, roof's brand new.
Well,
We got the roof redone completely when we moved in.
Well,
which is why we're now in this problem because we took care of that.
You took care of the roof.
Anticipating act. Yeah.
Okay.
And then the biggest thing too I wanted to point out is that I am on veterans VA loan for it. So in doing the complete refi, I lose my VA as well, which is that's something I can't give up.
I mean, you can refi into a new VA loan, but I'm telling you right now, like what's your rate on your current loan? Are you around like 4%?
2.75.
Yeah. You're not getting rid of that.
Please
don't get rid of that.
You find any other way to get this money other than doing
go to
a
Vito
cash
with the
out.
bent nose. Vito with the bent nose and keep that loan.
You know what drives me crazy is there's someone who they talked to who said, I'm sorry, we can't do that. but we would do a cash out refi for it.
Yeah.
There's someone who in my shoes doing what I do for a living who's recommending they cash out at 7% versus keeping their 2.75. I mean, it's maddening to me. But
we got to take the break, Mike.
Yeah.
Eric, and I'm sorry, I don't know your wife's name, and he mentioned it right when you came on there. Patricia, I'm sorry. I bet you, and I might be wrong about this, that Mike just gave you way more information than any you got from anywhere else, and legit information, because he's not trying to get your business. What we can do for you for free is to give us a call or leave your information with Jimmy. I'll call you on Monday. I'll do a free home valuation for you. I know you're not selling your house, but it would be helpful to actually really know what the house is worth. I know you have an idea. We can be a little more granular. Then you can take that information and go take Mike's advice to get the home equity loan, it's called. It's not not a line of credit, but a home.
He likes the fixed rate.
I like the fixed rate and the fixed prepayment.
Yeah.
So if you need the chunk and you don't really need like a line to use for, maybe they have other projects they want to do which are more spread out. So it might make sense to do the line of credit, but I do like the fixed interest rate.
And we also have a couple of people I know that do quote HELOCs when it's not with the other bank. I just found those companies, but I don't know how legit they are. I know the people I'm dealing with are legit, right? Or competitive, but we can get you places to shop around where they're not going to bait and switch you. If that's helpful to you, just give Jimmy the information. We'd love to talk to you on Monday.
Perfect. Thanks, guys.
Okay, thank you.
Appreciate you being a listener out there.
Yeah.
I can also connect them with the guys that did my my Hardy Plank
Oh
job.
yeah, later you can tell them. You can
They
tell
did a
them
great
per
job.
square foot. You probably could tell them per square foot what it cost.
I could tell them what I paid.
I paid $4. But that was just materials only, and that was 20 years ago, and I did it myself, and it cost me $4 per square foot.
That stuff's awesome. Me and my
I love
stepdad, we moved it while my mom was at work. Didn't even tell her we moved one day.
like you skip town type of move.
No, just we got a new place.
Yeah.
Just FYI, but my stepdad worked out this deal to do like a whole rehab on the outside of this place. It was on Thumb Point on the island in Fort Pierce. Beautiful spot, beautiful. Big old seawall patch, had our own deck, pool. I mean, it was amazing. But we had to do a lot of work, and they gave us this adjusted, rent payment if you're going to do the work. Well, we did hardy board on it. When we started it, we just put a chunk in a bucket of water to see how it would alter through our time of doing this. It didn't change.
It didn't move at all.
It looked exactly like when we dropped it in.
It didn't absorb any of the water or anything. And what is really good for is fireproofing.
Oh, it really is a wonderful product. But man, wear a mask when you're cutting it. That kicks up some
that dust. Yeah. What I did is I made little jigs so that like when you put your first one down and you snap the line, then after you set that first one and make sure it's level, I had like a little 4-inch jig or something. So when you took the second one, you just attach it to the first one and it would land perfectly where it's supposed to land.
They sell that tool now.
Oh, do they?
It's like a little hanger you put on.
Yeah.
No idea.
Then you just take your nail gun. Then you just take the nail gun. Boom, boom, boom. Boom, boom, boom.
You're done.
Hey,
my mom was pissed, by the way.
Well, communication is key in any health relationship.
Well, hey, when she had the cocktail by the pool for the first night, she kind of you can see her getting over it.
There's also that. What is it? The act now and beg for forgiveness later.
Screened in pool, looking out over this big lawn,
not so bad,
onto the Thumb Point, your seawall. Like as the sun was coming down, I could see it just like leaving her.
Yeah.
But man, when she got off work and she's like, "What did you guys do?"
Asking forgiveness over permission.
Yeah. Forgiveness is better than permission.
Ross,
we're gonna
jigs are about fishing, right?
Yeah, that's what I thought. I didn't know that we were trying to catch a house.
We're gonna go ahead and take a break, and on the flip side, we're gonna continue with the insurance conversation we had with the Ross. There were 3 bills that were passed recently to save money for homeowners. So I just want to talk about that real quick. I think we've mentioned a couple of them on the show before, but it just reminded me that those programs are out there. So we're going to talk about that for a second.
Love the conversation we end up having with you at 877-927-696. That can be very helpful, educational for those listening, like that call we just had with Eric and Patricia.
Somebody just said that squirrels love hardy board.
Squirrels
love
hardy
I didn't know
board.
that. I didn't know.
You know what loves squirrels? What? My BB gun.
Yes, my dog loves them too.
That's a good one. I like that one, Mike.
You know what it really loves?
Just kidding.
While the squirrels are loving hardy board.
Right. Yeah. It's like a match made in heaven right there.
Truly, like they're made for peanut butter and chocolate.
It's like a V trap.
That's
Chocolate. Peanut butter and chocolate. That sounds,
That's a good combo. Write that down, Timothy. We might have to make something like that one day. 877-927-6969. That's toll free to be on the radio. If you're not comfortable on the radio, always remember Florida Talk Real Estate is .com. Your one-stop real estate shop. You get the whole team. Pros, experts in their field at FloridaTalkRealEstate.com. We're back in 4 minutes. Great to have you with us every Saturday. Florida Talk Real Estate right here. Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com.
Hey, it's your boy Johhny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title, that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because FloridaTalkRealEstate.com has you covered. That's FloridaTalkRealEstate.com.
The Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johhny C. Got a question for the show? Call us live at 1-877-927-6969.
I'll say it again, 877-927-6969. Toll free if you'd like to be a part of the program. Questions, comments, concerns on the world of real estate? You want to dive into the conversation at hand? Dial it up. Jimothy will answer it. He'll get you going there. What's up, Jimothy?
Hello, and good morning.
Good morning. Of course, if you're not comfortable on the radio, always remember you have access to the entire team at FloridaTalkRealEstate.com. We're on Facebook and YouTube as well. live streaming every Saturday. Thanks for being with us on this Saturday. I'm Johhny C, your air traffic control. Ross Komarinetz is with us on this Saturday. He's with Brightway Insurance, Juno Beach. What's up, Ross?
What's up, man? What is up, South Florida?
Well, we got Mike Rauch here too. He's the mortgage guy from the mortgage firm. Hello,
Yo,
Mike.
the sky, Ross, the sky.
What is that?
That's right.
The sky.
I used to love to stand in the parking lot here at this radio
Yeah.
station and just stare up at the sunny sky.
Yeah.
People were like, what are you doing? You're
Yeah.
looking at the stars.
Oh my God, we forgot to talk about the eclipse.
We did.
Speaking of looking up at the stars.
Yeah.
Or
I was staring right at it the whole
sun.
time.
I
Dust
trumped
star.
it.
I had a welder's helmet
Nice. Good for
that
you.
I used. Yeah.
Jimmy
Did
D,
you really?
Jimmy D
Yeah.
sent me the best
Yeah.
meme ever about the eclipse, and it was the eclipse just going off to the right of the sun. It's how
Yes.
they viewed it in Buffalo.
Yeah.
You remember the Bills wide right?
Yeah.
Wide right.
Wide right.
Oh, that was the best. So good. He's a Bills fan too, so coming from him was glorious.
That's
We
so
had seen
cool.
out there, I was staring at the stars, and the look you would get from people.
Yeah.
It's like, what?
What are you doing?
Oh, they're there.
Yeah.
Believe
me.
me, they're there. Jimmy D's here staring at the stars all the time. He
Yeah,
is a
dude.
supernova, is what he is.
Mhm.
Our fearless leader, 12 plus years now, running a top producing Keller Williams team, Keller Williams Innovations. You find the Florida Home Pros team and Jim DePola. Jimmy D, how you be?
I'm doing great, guys. I'm doing great. We're going to continue with some insurance stuff with Ross Komarinetz from Brightway Insurance, Juno Beach. But first, Mike did a little very fast research for Eric and Patricia, the caller from the last segment. And what did you find out about interest rates for what they're talking about doing?
So I mentioned that the credit union. So I'm from the Northern Virginia area. I've been with this credit union forever. So they're up. I think they're based out of Maryland, but their rates are online. And so I just quick looked at their home equity loan rates, and depending on the repayment, so whether it's 5 year, 7 year, 10 or 15 or 20 is the highest they go. Their 20-year fixed rate, if you do 70% combined loan to value, so not 80%, but 70, is at 7.5%. Right. So home equity fixed rate 7.5. If you do a 5-year repayment, Johnny, it's 6.375.
Wow, that's cheaper than the
So it's kind of
market.
like car loans, and
Yeah.
in that like the way car rates are right now. If you did the 80%, the 20 years 7.75. So it's just like if you need to borrow 30 grand to do a project and you put yourself on a 20-year repayment at 7.75, the impact from your monthly payment perspective is just, it's not that impactful.
You
I
get,
guess
You can get 80% at 15 years.
Yeah, 20 years.
You said it's only 70% at 20 years.
So you can do, that was for that rate. So you could also do an 80%. The rate's a little bit higher if you're going 80% combined loan to value. So the way you do that math, guys, is you take the value of your home, calculate 80% of it, subtract what you owe on your first. That's going to be the limit of what you can do for your home equity loan.
Great
Right?
information.
Good
Mike.
information. Yeah.
Yeah, great
Awesome.
information.
Yeah.
So we were talking about insurance and how the headlines are all over the place, and the national media is saying that our average insurance rates are way higher than what we're experiencing here locally in South Florida. And we're in ground zero, guys. I
Yeah.
mean, South Florida, Southeast Florida is where it's at for insurance crisis. I mean, I know West Coast, Southwest Coast is also pretty high, but we're ground zero.
We're propping up. the
Yeah, we're
average.
right there.
Yeah.
So in the article talking about a la carte selection of your insurance in order to save some money, they had 3 things in here that I thought was interesting. There was a House bill in House Bill 7073, House Bill 7073 reduces property insurance premiums by $500 million statewide by eliminating certain taxes and fees that homeowners pay on their policies. Do you remember that, Ross? I'm not even sure if this was passed or not. They're saying that most of this passed this year.
I mean, I think I kind of remember.
I thought we
something
talked about it really
like,
quick. I think it was going to save like
It wasn't a lot.
$30 a year or something,
Yeah, it
but it
wasn't a
was
lot.
going to help. I mean, anything, right?
Anything.
It's
Yeah.
kind of like that, hurricane sales tax freeze.
Oh well,
You
we're
know?
gonna talk about that. Senate Bill 7028 allocates $200 million for improvement grants. Right, these grants are designed to empower homeowners to reduce their premiums by reinforcing their homes. A lot of people are talking about those programs.
Does that go to, is that like the hardest, not the
Like
hard,
the
not the hardest hit, the My Safe Florida. Oh my God.
My safe home.
My Safe Home. Yeah.
Oh, Eric and Patricia might want to look at that
Didn't
too.
even think about that. Oh my
But I don't
gosh.
think that will.
Siding.
Yeah, siding isn't going to help you on the
help.
wind portion of your premium.
Oh, they should have used it on the roof though, huh?
Yeah.
Yeah,
Damn it.
I didn't even think
Just to
about that.
refresh everybody on that one, it's basically $2 for every dollar you spend, up to 10,000.
Up
So
to
if you spend,
10,000.
you have a
That's it.
$15,000 project, essentially you're going to kick in 5. You're going to get 10 from this program. I don't think there's funding right now, but they might be on a similar cycle to what we're looking at for Hometown Heroes, which is come this summer, that funding might be refunded, and you definitely want to get in line, perhaps, like, or just kind of, if you have a project that qualifies,
Get it all
right?
lined up.
Maybe get it all lined up, and then just when the funding hits, just make sure you're in that application pool so you can get be on the board for that.
Yeah, really.
That's a good tip, Mike. And the third thing that they passed was House Bill 1029.
Oh,
and
that one.
Yeah, that one. Don't forget about the 1029 House Bill.
1029.
We talk about this one
It
a lot.
establishes a pilot program for condominium associations to apply for mitigation grants for
Please.
what they're which we really need. I didn't even know that was around.
I hope that's a big number, because
They don't have a
need some
number
help.
in here, and it's a pilot program, which gets me nervous, because we need help so much for that.
So if you're on a condo board, listen up.
Yeah,
Give us
now-
a call.
Yeah.
They got a bailout for mismanaging their coffers all these years.
No, Ross. I know you don't deal with condominium association homeowners insurance for the whole condo or the HOA. You do individual policies for people. Are you seeing any major problems for condo owners? Not from the association, but from their individual units. Has that really been affected the way that regular homeowners have been affected with the changes to the roof requirements and everything else that they've done? Or condos haven't really been affected individually?
Well, the roof isn't or the condo owner isn't responsible for the roof.
Right.
So, that just eliminates the threat of a lawsuit for an older roof right there. So not as much. We did see, pretty much like the number one condo writer stop offering new business everywhere, where they were pretty much open everywhere. But that was like 4 years ago. They stopped 3 years ago. And they've started to enter the market a little bit, not so much on the coast, but a little bit more inland. And, depending on the situation, we'll get a couple carriers come back on a condo, but if it's coastal, Citizens is probably going to be it.
For these interior. And we've seen those rates have kind of gone up.
They
Not
have
as
gone up.
drastically, but they've gone up. So I don't know if that's because their costs have gone up like across the board, and they just are making up for it by increasing in a segment that doesn't have the losses, but they're like, hey, if it's going up, why not spread it out type of thing. But they've definitely gone up, but not crazy, not like homeowners.
And they've gone up, and then there's also less care, there's less supply. There's less carriers offering coverage. So it's kind of like, this is the rate.
Yeah.
There's not too many options. So
now with the condo associations, that's a completely different story. People are, to me, there's a triple whammy going on with the condos right now. We've got the concrete restoration requirements to show that the buildings are structurally sound. You've got higher insurance rates unexpectedly for the condo associations themselves.
They are now forced to properly budget for reserve for long-term capital expenditures.
And that's the triple whammy, which is the reserves. Now they have to make sure that they have proper reserves. So between those three things, if you're thinking about buying a condo, it's very, very important that you understand those three issues and start asking during your due diligence period or your inspection period, what's going on with this stuff. There's a lot of, Paul Krasker taught me this a long time ago.
Law offices of Paul
Krasker, right?
Amongst many things.
And I forgot to mention that the app for the seller net sheet that we talked about with Eric and Patricia, that comes from Trident Title, which is also the sponsor of our show, right?
Yeah.
So they have a great app to tell you what you would net as a seller. It's an app also that a buyer tells you your buyer costs and tells you, what to expect for buyer costs in general. And they even have to compare between like selling it to a we buy houses fast for cash kind of company versus going with a regular realtor and show all those differences. So it's a really great app. Thank you, Trying to Title, for that.
Yeah.
But the one of the things that people don't know about that Paul Krasker taught me about, Law Office of Paul Krasker, was if a homeowner's condominium group, either in writing, in a newsletter, in meetings of the minute, or talked about at the meeting, just talking about a change in cost for assessment or something like that, the seller has an obligation, if they're selling the property, to let a buyer know, even if they haven't voted on it yet. So if they're just talking about it,
It's been mentioned.
you have to disclose, because why? In your contract, when you sell a house, in the as-is contract, it says the seller must disclose any unobservable fact that may materially affect the value of the property. Having an increase in your assessments is going to affect the value of your property, and you don't know because it's not materially seen.
Right.
I was going to say, I think there's even specific language about future assessments, special assessments. Have they been discussed at the board level? I think there's language in that addendum on the contract that kind of says,
and
you gotta disclose.
And most people don't know that. Most sellers don't know that. They don't know the regulations, right? They're not real estate agents or realtors. And then on top of it, they think that if they bury their head, or if they think they kind of know it's coming, they think they can get out of it by selling the house real fast before the assessment comes. But you really can't do that, because what will happen in that case? The new owners would have the ability to maybe sue you for not disclosing a fact that can materially affect the property that was unobservable, right?
Paul was in court one time and he said, if the seller knows, they must disclose.
What if the seller doesn't know?
That's got
Doesn't pay
Paul-
attention to
Paul
like
Cochran.
association emails? Or
Well,
Is that relevant?
That's so good.
Right?
Ross had a really good
It's
question.
topical.
Was that off the dope?
Yeah. Well, I was thinking
We
about
sit on that.
I was thinking about that other rhyming lawyer that
That's
came up
good.
this week.
Yeah.
Right. Remember? We didn't talk
Yes.
about that either, but
No.
the market really went crazy when that news came out.
That was well played.
Ross had a really good question, which was, well, what happens if the seller doesn't know? He or she doesn't keep up with the condo board and know what's going on and everything, doesn't open up their emails, maybe doesn't read the newsletter. Too bad. The bottom
I didn't know
line
I couldn't do that.
Yeah, the bottom line is you have a responsibility when you're selling a house to disclose that. So not knowing is not an option, unfortunately, according to the way I understand it.
I think the prudent listing agent is thinking about those things, right? Like, hey, this is part of the contract. We got to do a little bit of digging to see what's up.
It's very frustrating when you're working with sellers, when you tell them how important it is to gather this information and that we need their help, because property managers usually treat realtors like stuff on their shoe that they want to take off their shoe.
Really?
Oh yeah, it's
Gum?
really, really bad.
Like
They
gum,
don't
is that what you
return.
mean?
I have
That's what I
a
was
call
thinking.
out.
I was
Hey,
thinking gum.
I have a call out to Lang Management that's been 2 weeks now. I've called 4 times. Call me back, Lang Management. You know, these property management
They're
companies,
awfully busy.
they act like,
I used to joke, and listen, I've dealt with property management companies for many years, especially like doing condo financing. You just had to learn how to navigate that world and how to get answers to questions that aren't forthcoming. But I used to joke that their customer service was so poor that they couldn't even get hired at the DMV. Like they weren't even up to those standards. So joking. So
yeah,
I love you,
exactly.
property managers.
Yeah, we love you.
Yeah,
We love you so much. We love you so much. And it's like, it's really important that you understand all this. If you're buying a home, buying a condo, you got to start probing very deeply to find out. You got to investigate really hard in order to make sure that you know what's going on with the board, and don't trust the seller necessarily to give the information, because a lot of them don't know any better. And unfortunately, a lot of realtors, when they tell the seller that they need this information, they usually say, well, that's the realtor's job, right? But if the property manager won't call us or won't give us the information we want, a lot of times they go, we don't work for you. We work for the seller. We'll talk to the seller.
Yeah, you got to do that
Right?
little
And
legwork.
then the sellers are like, well, that's your job. That's what I'm paying you for, which we'd love to get the answers. But sometimes we tell them up front, this is going to be a tag team situation where we have to work together on this.
I will say this to the property management's credit. They have come a long way as far as having online access to documents. And if you're a member of the association, they oftentimes will have portals where you can get, the budget documents, the financials, the meeting minutes, like all this stuff should be accessible if you're using, then there's, professional property management companies that have come a long way in that regard. The other thing, Jim, is like, you have to be careful when you're buying a condo. You got to be really careful when you're selling a condo. So you have to know what type of offers you can accept. And if you're not looking at the insurance of the condo, and you're not looking at whether or not the condo is like on a blacklist, so to speak, and you don't know, like, I got to have cash offers. I mean, I had one today, Jim, where the listing agent called me, say, hey, I'm about to take this listing. Anything you see with the condo, right away, I go to the databases I have access to. I can see if it's a like black. I'm saying blacklist, like not available on FHA, not available for VA. Is it available for conventional? This one was not available for conventional financing because of insurance issues. And that just happened this week. And so I'm able to say, hey, listen, you can list it, but you're doing cash offer, cash only, or non-conforming, non-warrantable condos. So you have to know if someone comes to you with a straight conventional offer, doesn't matter the down payment. They're putting 50% down. Doesn't matter. You cannot do Fannie Freddie financing on this condo right now. So you just have to know that. Otherwise, you're spinning your wheels.
I have one right now in the Boca area where we have a non-warrantable building. I think I talked about it a couple of weeks ago, and the seller's going to actually end up having to hold on to it. They don't want to.
What is non-warrantable? Is that like an insurance issue? Is that?
It means no. So that's a financing issue. So Fannie or Freddie basically have guidelines when you're buying a condo or you're trying to get a loan on a condo. Not only does the borrower have to qualify for the financing, the condo project has to qualify. So that's unique to condos, like townhomes, villas, attached. Doesn't matter. So condos specifically, and
that's why you need all those financials from the association.
Looking at the budget,
right?
sometimes it depends on based on the down payment level. There's different guidelines you're following, but so non-warrantable means you cannot close on financing in that project and then deliver that loan to Fannie or Freddie, right? That has to be warranted to meet their guidelines.
Okay.
Yeah. So you're looking at non-conforming style loans, which is loans that aren't delivered to Fannie and Freddie,
which really reduce the pool of buyers.
Oh, yeah.
So then
Big
you
time.
become usually cash only pretty much.
Yeah, or cash
right?
equivalent kind of.
Yeah. And when you do that, they're going to want a deal.
Yeah, you're taking a haircut.
So they're going for the jugular. So what I told this homeowner, because she is on a tight budget, and this was a big part of her retirement savings. And the thing that gets me really depressed for her, she put $100,000 in assessments over the last couple of years, and there's more assessments coming for this building. So she
100 from each homeowner. Wow.
Over a couple of assessments.
Yeah.
It wasn't all one assessment.
Still,
That's
it's,
like criminally mismanaged. That's just
Th-
foul.
That's and it's very common down here in Florida. A lot of the condo boards, the over years, because it's been so lax about the oversight, they just kicked the can down the road because they didn't want to be the people raising the condo fees for
That's
the
right.
whole building, and they didn't want to be in the building on the elevator with
Nope.
everybody else.
Nobody
going, you
wants
just
to
raised
pay
me
more.
$200 a month.
Yeah, nobody wants to pay more. I get
So they all kicked the can down the road. Or I shouldn't say all, but many of them kicked the can down the road, and now everybody's paying the price.
I mean, imagine if you're in the insurance world and all the people who are insured have a vote on whether premiums increase or not. Like, right? Like it's kind of like that. Like, what would that look like? We had the lowest insurance in the nation, right? Down here in South Florida.
Of course.
So to wrap up with the insurance stuff, number one, there's a lot of stuff in the papers that we're not experiencing here, talking about these that yes, we are seeing $6,000 a year policies, right? $5,000 a year policies. But the $12,000 a year policies that you're reading about in the paper,
Average?
Average.
Yeah, for the
12,000.
average.
Yeah.
Yeah, I just don't think so. You know what I was thinking?
We know
though?
not.
You know what I was thinking? Do you think they actually added up everything and then divided by the number of properties, and that's the real average, or are they
Okay.
just using the term average?
Well,
do you know what I mean? Or is it an actual calculation?
Oh,
because the median might be much different than the average.
I agree with that.
Right?
Yeah, sure. Especially, I'm sure there are some crazy expensive policies in South Florida. Think about what we were talking about last week with
Bezos,
with the billionaires coming in and all that. So if they did it like that, or it could be the average of the people we talk to. So we started calling, every address on Palm Beach Island and seeing what their insurance premiums were, type of thing.
Sure. Or like
12
Ross's
would be nice.
neighborhood.
I think that everybody on Palm
12.
Beach would take 12. No problem.
But then you get the other side. Jimmy's new construction, like he gets some nice savings on his property,
or even the center of the state.
Right?
Yeah, in the center of the state, and even with Jimmy, the insurance policy who is quoted was significantly different than when he closed because of the time gap between the construction.
It was more.
So
that 4 months, it went up quite a bit.
Yeah, I think like 20% or something.
It might just say more about the average amount of research that goes into article generation. Like writing an article, the average amount of research done.
I wanted to just go into a couple of different subjects to round out today. So one of the things I want to go.
Let me just before you do that, everybody know you got a toll free number 877-927-6969. I got about 25 minutes remaining on this Saturday. You're more than welcome to be a part of the program. Of course, if you're not comfortable on the radio, always remember Florida Talk Real Estate is .com. We're on Facebook and YouTube. Lots to consume, lots to share, lots to learn. But FloridaTalkRealEstate.com is your hub, your one-stop real estate shop. Know it, use it, love it, share it.
Thank you, Johhny. And we love answering your questions off air, just like we do on air. And then one of the things that's always funny when people call us off air because they're embarrassed to call on air, and then we start talking on the phone, he's like, they usually stop and go, I feel like I'm on the radio right now, right? Because we're real and we just treat you like real human beings. We're not there to hard sell. We're just trying to get you answers. And if it makes sense to work with us, you work with us. If it makes sense to work with somebody else, that's what you should do.
That's what you should do. That's right.
I didn't get into this, but the governor and state legislature passed some laws about homelessness, like making sure that we don't look like Los Angeles and San Francisco and a couple of the other places. So they had some restriction on homelessness, and they came out with a report of the 25 cities that has the most homeless people. And out of the 25 cities, how many do you think were in Florida?
Oh, this is nationally?
Nationally.
Oh,
I'm going to say 0.
I would say 2.
I was going to say very low. I would 0 to 2. So maybe 1.
Wow, you guys are surprising me with your answers. And the only reason why I like as a journalist, like a former journalist, we know that a lot of like homeless people come during
down.
the season.
Snowbirds.
Right. So you figure that we would have higher. You don't hear people like going to Iowa for the season. Right?
No, but we don't have
I'm sorry,
we don't have homeless
I always use
encampment.
that all the time with you. I don't know why I do that.
You go down to the Keys, you go down to Key West, you see your fair share.
Yeah.
But there's no like.
But our biggest city is Miami, and like, how does that compare to say like Philly or New
Frisco,
York or Chicago?
And there's no like homeless subdivisions like there are in
like
San Francisco where it's
Oakland.
all.
Oh my God, I just saw some videos from Oakland. I'm like, oh my God, how did people allow their city to get like that? Like they didn't stop it at some point to say this got to stop.
Remember,
they did when
too
Xi
late.
Jinping came over.
They
got him all right out
yeah,
of there.
that's right.
See ya.
Quick, didn't it?
Yeah.
So you guys are right though about one thing, and that's why I so surprised. But you guys are right. There's only one city out of the 25 in Florida. 25 most homeless people, cities that have the most homeless people. Florida only has one, and that's Miami. We're 19 according to this report.
Okay.
We have 8.1 homeless people per 1,000. Okay, just to put that in perspective,
8.1 people.
8.1 persons per 1,000, I guess, that
always
are
thought
homeless. Oakland is at 22.7, just to give you an idea. Los Angeles is 18.7.
Great weather year round.
Sacramento is 17.6. Are we seeing a trend here about what state is number one?
Who's number 18 and number 20?
Okay, let's do that. Okay, 18. Number
Akron.
20 is Long Beach with 7.6, which is actually one below Miami. And then 18 is Dallas, 3.3, which is way less than 8.1.
Interesting.
Now, Dallas has actually a decline in homeless people. The biggest increase in Texas, 31% in Fort Worth. They had a 31% homeless increase. Miami is, I don't know if we have an increase or decrease. Miami has gone up 3% of homeless.
Huh.
Okay, so I just thought that was interesting. I don't know what the legislation is that we passed. I'm hoping it's effective. I do not want to see us turn into those other cities where we just have homeless camps all over the place. I don't understand it. I got nervous, like 45th Street going here to the station. How many weeks have you seen under that underpass where they're just a bunch of homeless people camped out there? I've
It's
seen
been
it
like
a
that
bunch of
for
times.
years. It
Yeah.
actually seems less to me.
Oh,
And
less now?
And I pass by that every single day
Of
coming into
course.
work. And to me, there are less there now than there ever
Well,
was.
that's a good
I see a lot around where I am, but I don't know if they're homeless or not, but they gather on the corners and they wave flags and they're like showing signs and they're chanting and get people to honk. I don't know if they're homeless or not.
There's a homeless field.
So I want to switch over to gears about this article I read, and it kind of remember, I don't know if you want to get into this too much, Ross, but it kind of remind me of your situation of decisions that you're making. It says some homeowners can't bear to let go of the low mortgage rates even when they move. And what's happening is this article was about people that have, like the interest rate that Eric and Patricia had on this just a few minutes ago. They were in the low or the high twos. How are you going to let that go? Right. That's what some people think.
I'm trying to think. What did I say? 4% for them. I'm thinking early 2020.
VA.
That's because rates went down.
I think
they stopped. There was a weird pause when COVID went on lockdown. That was 2020, March 2020. We kind of went on lockdown, but then later that year is when we saw the really low rates. I wonder if they refied into that rate or if that's what they got. They did a VA loan, so your VA loan rates are always going to be pretty attractive. I wonder if they refied into
like
that
21
rate.
or something like that.
Yeah.
Because the record low was January 7th, 2021. Why do I know that? That's the date that we started. That's the anniversary date when we started our show. So the anniversary date when we started the show is now the record lowest interest rate recorded on record since 1971.
I talk to people now
it's
about
all because of Florida Talk Real Estate. That's why that happened.
That's
of
right.
course.
Like they're in loans now. When are they going to refi? And that reminds me of the time. So I was talking to people and they would go from 3.5 to 2.75, like 3/4 of a point. And we were doing a lot, talking to a lot of people about those type of dips. And I'm like, well, when do you refi now? Well, I guess, okay, so if you're doing a loan at 7 now, we're gonna be talking when it's at 6.25, right? And people are like, what are you talking about? I'm not refining at 6.25. So it's funny like that
mental.
That mental.
You got to have that
hurdle.
2. 2's better than 3.
Yeah, it's
but
so
6
true.
isn't better. That's not that much better.
But I think to your point, Jim, that's part of why inventory remains tight.
It does, but
increasing though.
What I thought was interesting about the article is that in the article they talked to people that decided to keep the house, but they were moving somewhere else anyway. But they wanted to keep the house just because the interest rate was so low, so they decided to rent it out. And the article talks about when you're not planned to be a landlord and you just decide you're going to become a landlord without the real plan, it isn't always the best thing.
Not everybody's cup of tea.
Not everybody's cup of tea. And
but that's beautiful to be able to relocate without the need of the cash positioning from selling that property and make the decision.
That's true.
Choose between selling or renting, being a landlord. That's awesome.
And it's also a nice security blanket. Like, because you have a reasonable mortgage payment that you could fall back on if you have to. Right. So let's say you get into this house and the mortgage payment's higher, so the interest rate's higher, maybe the price point went up. You like all the things that you decided to move for in the first place. Well, if things go wrong, you can always go back to your low interest rate home that has a mortgage payment that's reasonable. So I think people think about that as well.
The thing that bothers me when I say bother, the thing I see in this article brought it up. It's like they had this one couple that they could rent it out for $2,300 a month, and their mortgage payment was about $1,600. So they'd be about $700. They'd be making on paper $700 a month, right, from the mortgage payment to what they get in rent collection.
Which they could in on budget, maybe not from a qualifying perspective, but in their household budget, they could direct towards their new higher mortgage obligation, right? So it's kicking in to help them cover the new expense.
Yes, we're talking about that with one of your customers, Eileen, that might ended up doing that eventually. But the thing is like how much rent profit is worth keeping the house, and that's where it becomes where if you don't have the plan on the math. I don't know how many times over the years we've been on the show, and even when I was a full-time investor going to investment groups, I was like, oh yeah, I'm making $250 or $300 a month on my income on the house or the rental property. So that comes out to $3,600 a year. Then your AC blows, and now you just blew 1 year of profit, more than a year, probably a year and a half.
You got to redo the whole thing.
Yeah. Or if the roof goes.
And that was going to be my question. All right. So if you're cash flowing 700, are you taking any of that and putting it somewhere for maintenance?
You
Right? 'Cause
should
the
be.
house is still going to need maintenance, so you have to take that into consideration.
When we work with people that are looking to become landlords, that's one of the costs that we have. That we break down all the costs, and it isn't just principal, interest, taxes, and insurance and an HOA if it's possible. There's a lot more costs that you have. For example, are you going to take a year rent as your basic budget? I'm going to rent this out for a year. Chances are you're not going to rent the place out if you do multiple years over time. You're not going to have a 12-month average rental. It'll probably be 10 months or 11 months.
Sure.
Because
Vacancy.
as people leave, you have a vacancy. Then you got to find the new place, right? You got to find the new renter. And there's a time lag there. So if you're budgeting, I'm making $700 a month times 12, right? Which is $8,400 a year. Are you really going to collect that $8,400 a year in, year out? Or should you be budgeting maybe $7,000, 10 months, and budget everything on that?
Mm-hmm.
And the more conservative you are, the better chance you have of success. But if you go too low, you're not going to be able to buy the property because other people are going to beat you out. So you
also
really
have
got to
the
know all your numbers.
Potential for property tax increases because you're going to lose your homestead exemptions. It's almost, you almost have to think about it like these condo budgets we're talking about, where you got your monthly expenses, you have some near-term expenses, and you have long-term capital expenses, things like roofs, windows, ACs,
advertising costs to get the new
legal
tenant,
fees if you have tenants that go south on you. Yeah, there's a lot to consider.
There's a lot. So don't just say, hey, I'm going to make $500 a month, and think you're going to do it, because what happens if the house loses equity while you're holding it? Would you have been better off to sell and take all that money to profit, put it in your pocket, and then use it for other purposes, or buy an investment property that makes sense?
Yeah.
That you might end up making more money that way than holding on to it. So there's nothing wrong with holding on to the property, guys. I'm not saying that people shouldn't, but if you're just doing it because you have a low interest rate, that doesn't really make sense to me. It hasn't ever made sense. I know that people don't always agree with me on this. It's okay. But to me, holding on to a house just for the interest rate doesnit make sense to me.
Well, it's an emphasis on the wrong number.
Mm-hmm.
And too many people focus on that number more than any other number. And it matters, but it's not the most valuable number.
The number is the cash flow, but the true cash flow,
right?
Considering your expenses. And so in that sense, interest rate doesn't matter at all. Like you could be
just
at
a part of the equation
as long as it's cash flowing is when you're considering all the numbers.
But even buying a home, I mean, it matters, but it's not the most important number. It's that bottom line number that matters most, because there's other variables included, property insurance on through, right? So it's but when the focus is all laser on the what percent am I getting, you're just never going to pull the trigger, probably.
Tony,
unless you got a 3 in the first.
Tony and Marla, I met them last Saturday, and really great former clients of mine. And then Tony and Marla are totally into planting in their yard in Boynton Beach.
Nice.
They have so many awesome plants over there. So
cannabis?
No, they have no cannabis, but they have a thing called neem, which is really good, NEEM, and it's really good for your digestive system and everything. So I go over there. Yeah, it's very popular in India. So I go over there, and I just went over there and grabbed a whole bunch of neem stuff and making tea out of it and stuff. It's pretty cool.
Nice.
But Tony is thinking about.
Wait, does it do anything for you? You're just healthy?
No, it's supposed to strengthen your intestines. What do you mean? Is it do anything?
Does it give you a buzz?
Get you high?
Yeah,
Does it
give
get
you a
buzz?
buzz.
No, it's not like.
I didn't want to say that.
It's not like
it's
it's not like kratom or whatever. But
so it's for digestive health.
It's digestive health and intestinal. Yeah,
I've heard of non. bread, right? A naan or
Oh yeah,
naan,
naan
right?
and
It's also
and
like
no,
so
that's
Indian?
just bread.
Is that
just
Indian?
it's just
Yeah,
pita.
yeah.
Yeah, naan is
Made-
just like pita bread.
Yeah,
It's
yeah.
like pita
Delicious.
bread. Yeah, it's good. I like
But they
that.
make it in like that hot stone like bowl.
Yeah,
don't
they
they,
do.
right?
Yes.
But
Am I
Tony
confusing cultures?
Tony had called and wants to be a landlord. So I said to him, "Do you understand the math behind being a landlord?" And I started talking about capitalization rate and cash on cash return. I started talking about these formulas. Tony didn't know any of the formulas. So one of the things I'm doing right now, I'm going through YouTube to find the best educational videos from other people that have created videos about cap rates and understanding math for landlords. And I'm going to be sending all that to Tony so that he can use these formulas when we start selling him properties. He can use these formulas to determine if the properties are going to be cash flowing the way he wants or the equity that he wants to build over time, so he can make the right decision. Way more involved than just saying I can get $2,300 a month for rent. I only have a $1,600 a month mortgage payment. Voila, cha-ching. It isn't like that.
Right.
What the heck just happened there,
Sorry,
Mike? What'd
I
you
was
do?
going to pass my phone to Johhny. I hit my mic.
Oh, thanks.
That
Just good
reminds me.
information for
That
him.
reminds me of the Steve Wynn thing that I told you about last week. Were you there for that? I think you were there.
No.
The guy that ripped the painting, Steve Wynn, the famous mogul, Las Vegas mogul.
No.
He lives in Palm Beach now.
What did he do?
You told me that story.
Oh, did I? I was calling our database a couple of weeks ago, and this guy picks up the phone, and we were talking. I don't want to mention his name on the air, because when you hear the story. So anyway, I said, can you take down some information from me? He goes, I can't drive right now. I'm on a security detail. We're driving on the Turnpike South. I got all these security cars around me. I go, you in law enforcement? And he goes, no, I'm a mover of high-end art.
Okay.
So I laughed and I said, so do you know a lot about high-end art, or you just know a lot about moving high-end art? Right? And he laughed and he goes, a little bit of both now. And I said, the only thing I know about art is I went up to one of the things when Steve Wynn had an art exhibit up in Vegas, and I went there and it was awesome. And I saw all this art he had brought in for this exhibit, but he had one painting that he kept up in his office, and it was from the 1500s or something. And it, I don't know.
Priceless painting.
It was a priceless painting. And it's 400 or 500 years old. And he was talking on the phone from what I read. I'm reading, I read this. And he moved really fast, just like you did.
Oh.
And he poked a hole in the painting. And his quote was, oh, and then a curse word. So the guy goes, yeah, I moved that painting.
Oh.
And I go, after it was destroyed, and he, not destroyed, but poked a hole in it. And he goes, yeah, I was the one that moved that painting when it had to move. So anyway, I just thought it's funny.
Did it add value or detract from the value?
I don't know, right?
Right.
So then I said,
Steve Wynn poked a hole in it.
yeah.
Right?
So the guy says, yeah, I got Steve Wynn in my phone.
Contacts.
And I go, hey,
Okay.
next time you talk to Steve, if he wants to buy any real estate, you know who he needs to be talked to. So now I have a 6 degrees of Kevin Bacon to Steve Wynn now.
Nice.
How good is that guy at going?
Amazing.
You
The
just
best
said
ever,
it.
actually.
Right?
Yeah.
When you're talking hundreds of millions of dollars.
Yeah, I think it's
you
more
know?
about the logistics of getting it from point A to point B safely.
True.
Yeah.
Right. And not
Just
getting
throw it in the back of the Tahoe with the
right.
beach chair.
You'd probably be,
blanket over.
you would think like
Yeah.
incognito is the way to go, as opposed to like a big, security
Stand
convoy.
out. Right.
Right.
It's crazy. We're probably going to talk a little bit about more of this next week, but I want to talk a little bit about now, when we have a couple minutes, this whole gentrification of this area. I really think it's happening. I think when we look back 30 years from now, it's going to be like, I don't know if we'll be around 30 years from now, but you'll be around, Mike. And you guys will be around.
I was down
But-
Rosemary Square just this week,
and all the
there's
changes going. Is that
just
amazing?
A lot of building going up there.
Stephen Ross is putting a $300 million project in there. They tore down the Improv and a couple other things over there, and they're putting in a $300 million upgrade to that, to the square or Rosemary,
Yeah.
whatever the hell
Yeah.
they call it now.
Oh yeah, the square. That's right.
Yeah, the square. But I was reading about this billionaire that's moving in from Florida, and he's moving his whole company down here.
Just another.
And he, well, actually, that's kind of true, but because it's happening as a trend. But he's really bullish on Florida, but he's still bullish on New York because he has very strong feelings for New York. But listen to this. This is how much like these billionaires coming in impact our area. In the article, it talks about he has 2 young children and they're really into hockey. So they're building a hockey facility, and Wayne Gretzky is helping back it in South Florida.
Palm Beach Gardens.
Just so his kids can have
top tier.
notch hockey.
That's awesome.
So they're coming in, and that's like crazy money, right?
That'd be great if it became something that we kind of were known for. Like
No,
people
hockey
coming
mecca.
down
This
here.
is not-
It'd be awesome.
You got the
It's not gonna
tennis
happen.
facilities down there in Boynton
Delray Tennis Center.
Yep. It used to be the mecca for high lie.
Yep, you're right.
Right.
And I'm not saying this is necessarily a bad thing. I'm just saying it's a transformative thing. I'm not saying good, bad, and different, but it's just amazing. One person comes down, he wants his kids to do something, special for them. And the next thing you know, it's like it might create a whole cottage industry that might turn into something really great.
Yeah.
And the other thing that we're seeing, so that's the tale of one world, right? The tale of one city, if you will. If you do tale of 2 cities.
Bunch of lacrosse
and
kids
then
who
I've
totally
got
love ice hockey.
Yeah, and then we got these 2 articles, which to me were kind of depressing. So Fort Pierce made it's opened up a complex up there for affordable housing, right? So it's 1, 2, and 3 bedroom apartments for. Oh, there's a caller.
Yes.
Let's go ahead and do that, and we'll
Sure.
talk about this in a second.
Yeah,
I'm sorry. Go
throw
ahead.
a little bookmark in there.
Great.
Right there.
Yep.
Who we got there, Jim?
Let's
We
take
have
the
Michael
call.
on the line. He wants to talk interest rates. Michael, welcome to Florida Talk Real Estate.
What's up, Michael?
Hello.
Hi. Welcome.
Hey, can you all hear me?
We can hear you, Michael. How's it going? This is Jim. How are you doing?
Hey, Jim, real good. Just had a question, just to circle back up on what you mentioned earlier. I know you had mentioned you get a lot of questions on this too. And I'm just trying to wrap my head around. I see the benefit from your perspective on the business side, but I'm struggling with the homeowner side. So if I'm locked in at a 3% 30-year note, I buy a new property at a peak price, I'm going to get at least 400 basis points higher interest rate, higher insurance, higher tax bill. I'm trying to understand, how is that? I see the benefit from your perspective on the, right, you guys are there to do transactions, but how does that benefit a homeowner? Like, why should a homeowner be thinking of doing something like that?
Well, it's a great question, and I just want to make it really clear. We never try to, and I'm not.
I can answer from a guy who's got a 4%, who's going to jump into a damn near 7%. Lifestyle change.
Mm-hmm.
I have a nice 3-bedroom pool home in Royal Palm Beach. It's been great. We've been there 10 years.
Yep, 10 years.
I got a new AC. I just redid my pool. I got almost 75% brand new fence right now.
Impact windows.
Like I'm doing pretty well where I'm at. But we're going to get into a nicer home with an in-law unit to have my family with me, have my mom and have more space. So it's just for us, it's a lifestyle change. Now, while we're going to try to keep our dollars as low as possible, but I'm going to transition in my lifestyle. So there's one perspective of how somebody is going to be giving up a 4%. And again, I did refi. When did we refi, Mike? 6 years ago? Because I dropped my PMI, which got me
5-6 years.
Because I had to do FHA when I first got in, but we dropped the MI, refied, and had to pay back some a little bit of costs for down payment assistance, but it still worked out, and we did a little cash out position well. I'm still really, really nicely positioned, but my equity position is phenomenal. So we're gonna have some cash to play with, obviously, but there's one perspective as to why I would.
Yeah,
do that.
there's three things that I want.
I understand I get it, Johnny. I hear you. Like,
well, there's an easy answer. I mean, there's just a layup, a finger roll, if you will.
Change, like, I hear you, but practically, financially, if you do the dollars and cents, just to your point, you're going from a 4% to a 7%. You're resetting the clock. Whether it's a 15, 10, 30-year mortgage, whatever it is, you're taking all of that equity, you're putting it into the new house. Yes, it's going to be priced lower, you're probably going to be financing more than what you owe on the house now because you're going into a house that's at its peak price.
Yeah, probably about the same. It's going to be, you're right. It'll be a little bit more, not dramatically more.
I don't agree with that. So what I want to tell you is it depends how much equity you have in your home.
Right.
So if you moved into your home and you did 3.5% down payment to move into the home, and now you have a ton of equity, you might be putting 35% down on the new home, which is going to be more expensive, most probably, because you're probably doing a lifestyle change, but you're going to be putting a larger down payment. Also, you get portability taxes where you could transfer the taxes from the old, get a credit from the taxes you've saved from your homesteading to the new place. But you are going to get beat up on the interest rate. And as far as peak prices, who knows if we're at the peak? The last time that we had depreciation was 2014.
I think this would be an awesome conversation to have much earlier in the show.
Yeah, if you can call next week, we'd love to talk to you.
Yeah,
about
we're
it.
flat out of time. I apologize, my brother. We do need to move on though, and thank you for the phone call today. But call next week a little earlier, man. I think this is a phenomenal conversation.
We love talking about this. I'll just say that if it was a strictly financial decision, then what he's saying holds, makes a lot of sense.
Yes,
but most people aren't making strictly financial decisions. They're making lifestyle decisions.
We've said for 12 years, the best time to buy is when it's right for you and your family. That's just the brass tacks. We are flat out of time though, and man, make that call next week. I think that's an awesome conversation. It is great. Thank you for being with us. 877-927-6969. It'll roll through for the locker room. Of course, if you need this team, always remember Florida Talk Real Estate is .com, your one-stop real estate shop. You got the hotline there, 888-973-7828. 24 hours a day, 7 days a week, answered by a live body. You'll find it at floridatalkrealestate.com. We're on Facebook and YouTube as well. Thanks for being with us every Saturday. And thanks for the phone calls today as well. We always like talking to the folks. Ross Komarinetz, Brightway Insurance, Juno Beach. Have a great rest of your weekend.
Thank you. You too.
Always good to see you. Mike Rauch, the mortgage guy from the mortgage firm. I hope you have a great weekend.
I plan on it. Thank you very much. You too.
And Jim DePaola, I hope you have the best weekend, my friend. Of course, Florida Home Pros, Keller Williams Innovations. Have an awesome weekend.
Thank you, guys. Have a great weekend yourself.
Jimothy, be listening. Have a good rest of your weekend, my dude.
Have a nice weekend, guys. We'll see you next week.
Yes, indeed. Saturdays, 9 a.m., 2 hours of infotainment. Great to have you along for the ride every Saturday. We'll do it again next Saturday. Florida Talk Real Estate right here on Real.